sellers are sitting there hoping somebody will come buy their home because there's a lot more inventory. It's not a terrible market. It's just kind of a normal market now.
Yeah.
But the buyer has that power. Like, I'll buy your home. I'll give you this price, but I need you to pay my realtor. And like you said, that's every transaction I'm seeing so far. That's covered. Still, nothing's changed, basically.
Service members should get the most out of their VA benefits for home ownership. That's our belief, and that's why we're here. So whether you're looking to own your dream home, considering refinancing, or just exploring the VA home loan process, you've come to the right place. Welcome to Helping Heroes Become Homeowners. Hey everyone, my name is Richard Sarey, broker owner of Alliance Mortgage Group, and this is another episode of Helping Heroes Become Homeowners. Today I have one of my loan officers on with me, Ryan Gibson, also with Alliance Mortgage Group. He's a senior mortgage broker located in Van Alstyne, Texas. And today we're going to talk about a handful of topics that I think are important. Usually every quarter I'll do a Google search just to see what consumers and clients are asking for, what they're searching for. And there's a lot of good information out there right now that I think we need to address and kind of answer those questions. So what we're going to do is kind of like a round robin. We're just going to go back and forth on some questions and have those discussions. So if you're out there listening and one of these topics pertain to you, it's good to have, good to know, and be up to speed on what's affecting the marketplace right now. So Ryan, I know the biggest one that I've seen for first-time home buyers, because of what I read recently with a survey, there's about 25% of first-time home buyers that want to wait until the election because you've got different policies by different candidates. I agree and I disagree with that. So with the first-time home buyer programs that are available, what do you see that's probably has the best incentives if you're out there looking for a home right now?
It's funny because I agree and disagree as well with that thinking. You can make an argument for both sides of it. But to your question, incentives, I still like the lender that offers the FHA 3.5% down, where that 3.5% is covered by a grant. So it's zero down. The only thing you have to come out of pocket for is your closing costs, setting up an escrow account, title fees, lender fees, recording fees to the county, whatever. But those can be covered by a seller concession. And in the market we're in, where it's more of a buyer's market now than it has been over the last several years, almost every deal that comes across my desk has a seller concession already. It's just part of the negotiation at this point, where the seller used to have all the power. It's not the case right now. That's what makes it a good time for a buyer is you can swing deals right now far more than you could. So point being, just like that client we closed, was it a month ago, 45 days ago, whatever, they were out of pocket less than their rent payment they were paying, basically. They were out of pocket, I want to say, $1,500 or something like that. It's been a couple months because they used that grant. They also got a seller concession, and really their only out of pocket was their earnest money deposit. So to me, that's the one I like the most. I know there's a couple other first-time homebuyer programs that I probably can't speak to as well as that one, but that's the one I like the best because it gets people in with zero or as close to zero out of pocket as you can get.
Yeah. So with that program that you're talking about, there's income limits that determine, whether or not that first-time home buyer qualifies for that program. I think with that particular one, it's 140% of the income limit for the county with the FHA Empower.
Yeah, it'd be odd to make too much money for that program.
Right. Now with the conventional zero down, you can get in with nothing down. What the lender's going to do is they're going to give you as a second lien that 3% down payment. That's the minimum down payment for conventional for first-time home buyers. So that 3% that they're going to give you will be filed as a second lien. There's no interest running on that. There's no payment due on that. However, if you want to make a payment on that, you can. Now, one thing that we have to calculate correctly, though, is what county are you buying in, going to purchase in, and what that income limit is for the county. Majority of the counties in our area here in Texas are about 85,480, I believe, or 85,684. So if you're underneath that amount, then you would qualify for that zero down. if you're under 50% of the income limit for the county, you're going to get an additional grant. I think up to $2,500, I believe, is what that grant is with conventional, with what Franny is doing or Freddie is doing with that program. So that is another opportunity to do a grant through conventional. In Texas, you can do the T-Shack program that also has income county limits on it too. So there's a lot of programs out there that you may or may not be wise to go look for. That's why you want to get in touch with a mortgage lender, mortgage broker, and find out what your avenues are for buying a home, because you might be able to get in, like you mentioned, less than a down payment on rent and first month's rent.
Yeah.
So
well, I mean, and not to mention USDA. I just pre-qualified a 20-year-old girl earlier this week, late last week, whatever, to purchase a home up in Oklahoma. Can't think of the name of the town. It doesn't matter, I guess. But she qualified 100% financing. USDA's can be a little tricky fitting in the box, with their credit requirements, and they have income limitations as well. But when you fit, it's a really good program. It's 100% financing as well up in Medill, Oklahoma. I just remember.
Yeah.
And yeah, I mean, she was shocked at the rates, because the USDA rates are great as well. The rates she was able to get, the payment, and how much out of pocket, all of it was all a pleasant surprise for her. So that's another avenue, USDA. And with USDA, so many people think that, well, those are loans for people on farms or way out in the country. And I've said on here multiple times and other places, USDA is available in far more areas than most people think. All of Van Alstyne is eligible for USDA. All of these towns around me, Gunner, most of Anna, Texas, certainly Howe, up into Sherman, everything out to the east of us. Almost everything is USDA eligible as far as the property, because the USDA looks at two things: the property, the specific property you want to buy, as well as how much money you make, credit scores, things like that, loan to value or debt to income. But as far as just the location, USDA works in more places than people think. And then obviously, Rich, in addition to USDA, VA, that's one of the perks of the VA loan program. It's 100% financing. So to your point, there are, I think, more ways than people realize that you can get into a home with no down payment. And if that's something you want to do, I'll stop short of saying I can almost guarantee you there's a way to do it. I mean, there may not be for some people, but in many, many, many cases, we can make it work. Yep. What rate you get depends on which one of these programs we go through, but we can make it work in a lot of cases.
And there's opportunities. I mean, the inventory has increased quite a bit over the last handful of months. I was in a open house, broker open house yesterday, and having a conversation with that realtor, and things I wouldn't say have slowed down. They're not as hot as it was last quarter. However, there's going to be opportunity for buyers to negotiate those concessions, because sellers want to sell and their houses are on the market longer than 30, 45 days. They start getting a little bit nervous because that trend has changed pretty quickly. So there could be an opportunity to also, like you said, walk in with some seller concession help and just have your earnest money and option fee as part of your contribution to the loan.
Well, yeah. And at the risk of sounding like, I always say now is a great time to buy, because I believe it. Like in the market we were in 2 years ago, it was a good time to buy. And I could make a very good argument for that. And I can make a good argument now. The reason I think now is a unique and good time to buy compared to maybe other times. If you think I want to wait because rates are going to come down, you might be right. You might be wrong. We thought rates were going to come down with this last Fed cut, and rates have done nothing but go up. Nobody knows what's going to happen there. But my point is, if you feel like you need a lower rate to make it work, whatever you have in mind, use those seller concessions that are on almost every deal right now to buy your rate down. And that way you're getting the rate that you kind of wanted, and you're not going to want to refi later because you already got that lower rate. Like there's all sorts of different ways to make the deal work right now if now's the right time for you to buy. Waiting, it could work out, but there's inventory now like there hasn't been in a long time. That puts the buyer in the stronger position over the seller. And if now's the right time for you and your family, I wouldn't hesitate, because there's no
I
guarantee
wouldn't
of
either.
what's coming. Election stuff, there's zero data that says rates come down during an election. There's just nothing that ties to that. It might
Right.
in this case, but it won't be because of the election or because of who gets into office. It'll be data based. And that's why rates are going up right now, is because the data is showing our economy stronger than a lot of people think it is.
Yeah.
Which is
The data came out today that showed people are spending money. They spent more money this last
where
month than
they're
they did.
where they're spending it is maybe,
So it's very strange how they're not necessarily getting it all correct, but our economy is stronger than most people think. And not to say for everyone, but as what the numbers show. So let's talk about, we talked about what you can get in, but one of the top topic obviously is interest rates. And we're going to have this conversation on interest rates, I just want to throw out there that we're going to give the average Fannie Mae rate of the week. Now, Fannie Mae rates, when you see them publicized or on the news, that is last week's data. That's not current data. So as a whole, mortgage rates vary from program to program, credit score, how much you're putting down. So on an average, the Fannie Mae rate right now, I believe, is at 6.5% on a 30-year. On a 15-year, you're at 5.8. So in terms of that range, that's last week's data. And so to get an accurate rate, what should a customer do to get something more accurate than seeing, doing their own research online and trying to get an idea of where rates are? What should they do?
Call me, call you.
Call a mortgage loan officer.
Call us.
Absolutely.
Yeah, I mean, honestly, because we don't just, I think sometimes people get frustrated, like, just tell me the rate. And we actually, with our license, we can't. We have to, anytime, that's why you said everything you just said. Like, we can't just say what a rate is without saying all the other things that we have to say or publish. And that really, man, these rates can swing big time from loan amount to obviously the type of loan. The average rate you just gave was for a conventional loan. FHA, VA, USDA, those tend to be a little bit less. Sometimes the cost is a little bit more than a conventional loan, but the rate's a little bit better. But all those things factor in. I don't need to pull your credit necessarily to give you a rate quote. We can just talk, and you can tell me verbally what your credit score is, and then give me all the other things I need. What's the purchase price going to be? Or if we're refinancing, what do you owe? Roughly what's your credit score? What's the house worth? All those things need to be factored in. And then we can give you a rate and an idea on what the payment would look like. Now, when we pull credit, if it's different, then things might change. But we got to at least get some of that basic stuff to give somebody a rate quote and a payment quote for sure.
Yeah, absolutely. Because like you said, I do get phone calls. Hey, what's your rate today? Well, I mean, I need more information. What are you trying to do? Is it a purchase? Is it a refi? What program? So there's a lot of checks and balances that we as a loan officer want to get from the client to make sure that we are providing accurate data and accurate information on what they want to do. And being a mortgage broker, we have avenues with our investors to get the best pricing, or at least obtain the best pricing on that current time at that day. Now, market rates right now are volatile again. I mean, they're up and down. This last week, it really hasn't been in our favor, but for the most part, rates are still lower than they were 2 years ago. So don't read a lot into the noise. There's still opportunity to refinance your home. There's opportunities to get in at a low rate, lower than it was a couple of years ago. And the affordability on the homes is much better than it was a handful of years. That's what's happening right now.
Yeah. Yeah. Well, and we talked a little bit about points, like what's your rate? Well, that's another piece that we haven't covered here is, well, what's your goal? Do you, whether you're refinancing or buying, is it for a year or two, or is this the last house you're ever going to own? Those things matter when we talk about quoting rates, because that's going to tell us that it probably makes sense to not pay any points, not charge this client any points, and just get them the best rate I can at the lowest cost. Or, hey, I think you should consider paying a point or two and buy this rate down based on your plan and your goals. And here's the math around that. The cost of that divided by what you're going to save, as long as you're there at least this 5 years or 3 years or whatever it may be, I would pay those points. But that all matters as well, and that's all stuff that we walk people through and make the math understandable. Even if you've never done this before, this is your third time, but it's spread out 10 to 15 years apart. We'll make that math easy to understand for really anybody, so that you can make a decision and not just trust that the loan officer or the broker has your best interest in mind. We'll make it to where you can figure this out on your own, and make it make sense.
Yeah, absolutely. There's a lot of things that I talk about are the points, like you said, and the break-even point, and the things that come into play on that. Well, what's the cost going to look like maybe next year to refinance? It might be cheaper just to discount it now versus refinancing that loan and incurring maybe some costs to get a lower rate. So there's a lot of things that we have to discuss and discern and make sure that it's in the best interest of the customer to do that, for sure.
Yeah. Yep.
So with that being said, we have points. Do we pay? Do we not pay? What's the likelihood of my credit score affecting the interest rate?
It 100% affects the interest rate. We can get people approved down to in the 500s on a credit score, and obviously, if you're at 750 or 8, we're going to be able to ideally get you approved. Although credit's not the only thing we look at, obviously, but the rate you're going to get can be vastly different. One credit score versus the other. Some of these programs, like that zero down program I started off talking about, that's a set interest rate. It almost doesn't matter. It matters what your score is, but you're going to get the same rate whether you have a 650 or 750. Now, what you pay for that rate might be different. And that's, one of the things I talk to people about when it comes to rates is that I think maybe helps explain interest rates better is I tell people rates don't change. They don't change ever. 6.5 is there today. It'll be there tomorrow. It was there 2 years ago. It'll be there 5 years from now. But what it costs to get that rate changes every single day. Right. And multiple times throughout the day, it can change. If there's a big swing in the market, what I quote you in the morning could change in the afternoon. I'll still be able to get you 6.5, but it might get cheaper or it might get more expensive. And that's those points we talk about. But credit score also might change the cost of that rate from one day to the next. But credit matters for sure.
Yeah, absolutely. Because lenders have, I don't say lenders, Freddie and Fannie have the loan level price adjustments that affect the pricing of that coupon that you're just mentioning, that rate or coupon, on what it's going to cost them to get to that particular rate. So there's different adjustments in each different credit score band from 620 up to, I think it's 780. So everything in between on conventional is going to have a price adjustments for that. So if you're at a 638 credit score and you're going conventional financing, you need to be over 640 to get into a different pricing grid. So when we're having those conversations about credit, we can discern what score is going to put you into a better pricing platform or less cost to get to that rate. So with FHA and VA, lenders will have their own loan level price adjustments for credit risk on that. Necessarily VA and FHA aren't charging back the lender. The lender's going to incur the risk of that rate for that credit score and make their adjustments accordingly on their own. So each lender's going to have their own different type of adjustment to rate for credit scores for FHA and VA. So it does matter. Keep your credit up to speed. Don't fall behind on your debt. Definitely don't fall behind on your mortgage. So I had a podcast a few weeks ago about credit and how to get that maintained and improved. So credit score is important when it comes to the final interest rate or any rate that you're inquiring for, car loan, credit card, whatever it may be. So it's very important.
Before we get away from rate completely, I'm curious. So the question, other than just what's the interest rate right now, what are rates doing? The next most common question I think I probably get is, or maybe it's not a question, it's just the response when I'm talking to somebody and maybe they called to get pre-qualified and I tell them they're approved, but then I follow up a month later just to check in. And one of the most common things I hear is, we just don't know if we should buy right now. We're trying to decide if we should buy or wait. And they might ask me what I think. when you get that question, that response, whatever, what are you saying to people?
The first thing I say is it's always a good time to buy, just like you say. But the next question is, what is your budget? Do you have a payment budgeted for your anticipated mortgage payment? And then work it from there.
Yeah.
If that price point only gets them to a $300,000 purchase price and they're looking for something higher, then at that point, I'm going to work up the loan and the figures to say, okay, this is really where you probably need to estimate your budget. What can you adjust accordingly? Can we pay off some debt maybe in a month to free up more cash flow to make you more comfortable and that you're not house poor, so to speak? So there's just more of a consultant aspect when it comes to that question, because at the end of the day, if they're going to save more money because they want to or need to, the price of that home may be 10% more. So that means they have to put more money down than they originally had maybe budgeted. And that payment, depending on where rates are when they finally fall back in, could end up just being the same payment. You just never know. There's a lot of other external factors that come into play when you're calculating that. I have an actual example of that particular question. Is I've got a police officer who wants to buy a home. He's 34 years old, never owned a home, always rented, and he's got money saved, but not enough that he needs for the price point that he wants. So, there's the other programs that we have available to help with the down payment. He just makes too much money. And some of the terms that he wants on that particular loan don't meet his requirements for that program. So, in his situation, he wants to buy, he knows he should buy, he just needs to save.
Yeah.
Because they make good household income. It's just a matter of the savings aspect of it.
Yeah.
So if you're not sure if you should just do it all together, again, get consultant from us. We'll put something together and put you on a plan and get you a better idea of what the payment really looks like on that particular price point in the area that you're looking to buy.
Yeah. Yeah. That's kind of what my response is. Like if you're asking me, you're thinking about it already, right? You're already thinking about buying for whatever your reason is. But if you're just not sure, because of there's so much uncertainty right now. I can understand anybody not being certain about a big transaction. But if you're thinking about it, then what is your profile? Like, if your credit's strong and your income's strong and your job is stable, and you've put away X amount to cover down payment, assuming you're planning, maybe you're trying to do the 100% financing, whatever. But if there's job stability, credit's there to qualify for whatever it is you're wanting to do, and your income is there to qualify whatever you're wanting to do, then it's, what is your goal? Forget about what the credit score, or not the credit score, but the interest rates are. What is your goal? Well, I want to buy a house. I want to keep my payment under this. Well, if that works now, if it were me, I'd buy. I wouldn't hesitate at all right now. If that doesn't work, waiting may or may not change that. Again, the idea that, if rates come down in some big way, like some people think, I don't know what you think, Rich. I'm
not seeing a way down correction.
No.
Again, the economy doesn't tell us there needs to be one.
And then economy suggests we need to take back that Fed cut. But if rates do come down in some big way that's significant, because 0.25% isn't really going to change anything. If rates come down 0.25, roughly, that doesn't change anything. But if we get a whole point better, or 1.5, that makes a difference in affordability. But that's going to bring people into the market in a pretty big wave, I would imagine. And that inventory is going to shrink fast, and that's going to cause home values to go up. So waiting, you got to time it just right, and good luck with that. That's dumb luck. Like, timing the market is a fool's game when it comes to interest rates, housing, whatever. Nobody knows. Nobody.
I think some buyers with the NAR ruling maybe have a misunderstanding of the buyer fee then having to be paid to the realtor if the sellers aren't going to contribute towards the compensation to the agent. With that, nothing really has changed. Now the seller can refuse to pay the buyer's agent the 3% or whatever you negotiated with the buyer agreement, and that would then fall onto the buyer. But at the end of the day, I haven't seen a situation like that come together yet. Every contract that I've received since that ruling, the seller's paying the buyer reps agreement up to 3%. So if you're listening out there and you're concerned about not having to pay or being able to pay that percentage of that fee, it's not saying it couldn't affect you, but right now the market's not telling us anything's really changed.
No, I mean, we go back to the market, right? I think that might change things if we get back into a market similar to where we were a couple of years ago, where these sellers have all the power.
Yeah, that's true.
When the seller has all the power, they might say, yeah, but I'm not paying, a buyer commission. I don't have to. Yeah. We might see some of that then, and then the buyer is going to have to pay that. But in the market we're in now, sellers are sitting there hoping somebody will come buy their home because there's a lot more inventory. It's not a terrible market. It's just kind of a normal market now.
Yeah.
But the buyer has that power. Like, I'll buy your home. I'll give you this price, but I need you to pay my realtor. And like you said, that's every transaction I'm seeing so far. That's covered. Still, nothing's changed, basically.
Yeah.
So, I mean, there's another reason you could argue that now is a good time to buy, because
Absolutely.
that could change to some extent a year from now, whatever, when this market shifts back towards the seller side.
Yeah, that's a good point, because that
could change.
I mean, the buyer was paying everything 2.5 years ago. Mm-hmm. Title, survey, no inspection, I mean, everything. So that's a good point.
Waiving
the one thing too that is on our list: can I qualify for a mortgage with student loans or other significant debt? I mean, you can. Student loan debt, just from a guideline perspective, don't let that hold you back if you got student loan debt. But from a guideline perspective, we still have to calculate a payment if it's deferred. Mm-hmm. If it's a VA loan and you're deferred, it's got to be deferred from 12 months from the close date of your mortgage. If it's within that 12 months, then there's a calculation that we put together to calculate a payment. But for the most part, the student loan debt, we're going to calculate a payment for your ratios. If that ratio still works, then great. We're going to move forward with your approval. If we have a challenge on the ratio with the student loan debt, then we're going to have a conversation of restructuring that loan. Maybe having to pay off a debt or whatever the case may be to get that loan to work. So don't let student loan debt hold you back if you do have a lot out there, or have any for that matter. So be mindful when you're talking with us or with anyone in the marketplace. When you say what debt load you have, some people leave out the student loan debt because they're not making payments on it because it's deferred. And then when we get the credit pulled, we have all that student loan debt show up on the credit report. So when you're inquiring for a mortgage and you do have deferred student loan debt, you want to let us know that, yes, I do have that and it's deferred, so we can calculate what that payment is when we're trying to get you pre-approved.
Yeah. Yeah. I mean, this is what we do, right? This is what we do for a living. This is all I've ever done. I know it's pretty much all you've ever done for the most part. And whatever your situation is, whether you don't think you can qualify because you don't have you got too much student loan debt, like Rich was just saying, or anything else, you might be right, you might be wrong, but that's what we help with. Is if you call us, we'll walk you through it. We don't pressure sales. Like, things are what they are. We'll go through those things and we'll determine, actually you do qualify. Here's what you qualify for. Or right now you don't qualify. I can't make anything work. Here's what you need to do, though, so that you can buy in 6 months or a year and a half or whatever. We'll help you with all of it regardless. We don't just, as soon as we see a client or a customer that probably doesn't qualify, hang up and go on to the next one. I mean, our job is to help. And that's what we enjoy doing. That's where we get gratification in this job, is helping people, even if it's not getting to the closing table in 30 days, even if it's going to be a year or whatever. Just call and we'll go through those things with you, help you understand what you need to understand, and then help you get on a plan, whether it's to buy in 30 days or in a year.
Yeah, absolutely. We're here to help.
Yep.
Our next question that I've ran through on this list: what is a VA loan and do I qualify? So a VA loan is a veteran administration loan, 100% financing. To qualify, you have to have a certificate of eligibility. So, if you got honorable discharge, we'll pull that certificate of eligibility. If you've used it in the past, you may still have additional entitlement left to buy that next home with nothing down. To restore the entitlement, we'd have to send to the VA your closing statement on the previous VA loan that you had on the home to restore that. Because if you have 100% entitlement, there is no loan limit. It doesn't matter if it's $1 million, $2 million, it's 100% financing. Some lenders will finance higher than $2 million on a VA loan, but at the end of the day, if you've got full entitlement, there is no loan limit. It only falls back to a loan limit if you got some entitlement used where you may or may not have to put some money down. And even if you did, you're still going to have a better affordability rate than if you went conventional or FHA putting money down. So at the end of the day, we calculate that from the certificate of eligibility. As far as credit score, your credit score, VA doesn't necessarily have a minimum credit score in their handbook, but at the end of the day, lenders have overlays. So some lenders will go down to 580, 560, 550. But you have to have an automated approval. If you want to try and get a manual underwrite done on a VA loan with a little lower credit score, you really can't be late in the last 12 or 24 months. But if you have a really good explanation letter of why that happened, it could be a case-by-case circumstance where that does get approved. So from a VA perspective, don't ever count yourself out. Because from an underwriter's viewpoint, per the handbook, they will do anything and everything to try and get that veteran approved. So manual underwrites have a higher success rate just from the data than FHA. Because you can't really some lenders are starting to do manual underwrites on conventional, but the likelihood of that getting done is going to be very tight. With VA, it's a different avenue. So to start with a VA loan, you have to have that certificate of eligibility to get started.
So we've talked about this before, but I think it's worth covering again and again and again and again, because we continually see and hear some of the same things around VA, the same what's the phrase of the year? Misinformation. If you're talking to a realtor right now that is weary on accepting a VA offer because of whatever the misconceptions are, how do you respond to that?
I show them really the data. I mean, you essentially have a conventional buyer using a VA loan, so they don't have to put anything down with the entitlement that they've earned. So if I've got let's just call it a 680 credit score, and my ratios are 45%, I'm putting nothing down, I have assets, I have reserves, that is not a weak buyer. It should not matter that my buyer is putting nothing down, because at the end of the day, I'm financing 100% of that, but the lender's guaranteeing 25% of the loan amount. So from the lender's viewpoint, that's a very conservative loan. I think what realtors get hung up on is the nothing down. Yeah. And the nothing down, in their mind, they may go back to a previous transaction where, that last person put nothing down and something happened and the financing fell through. And at the end of the day, we had to relist the property. Those past experiences aren't equal to a VA experience, because a VA has a higher approval rate than conventional or FHA all day long. So at the end of the day, when I'm having those conversations, or we know we're going to put an offer in on a home using VA financing, I've said this before, I will call the listing agent, and I will also submit kind of like an explanation letter, so to speak, of how VA works and what the sellers can and cannot do, and kind of give them an idea with the offer that VA is a strong offer, and then have the conversation with the listing agent to answer any questions that they have on it.
I think the most common thing I hear that makes a realtor maybe weary of accepting a VA offer is experiences they've had, or they think they've had, or they've heard of this, that, or the other around the appraisal process with a VA deal. What do you, if you have a realtor that's objecting around that idea, what do you say?
I think most realtors try and forward think what issues with the house would avoid it from having a VA approval on appraisals. So what I mean by that is, if they have cosmetic issues, they think VA is not going to work. That's not true. If there's, well, let's go back. Let's say we do a conventional loan versus a VA appraisal. You're still going to have issues with, is it safe? Is it sound? Is it secure on a conventional loan? On a VA, that's all the appraiser's looking for. Is it safe? Is it sound? Is it secure? So if I've got a roof that needs repair, or I've got a foundation that needs repair, or I've got peeling of paint and the house was built prior to 78, all those are going to come into play on any other financing that you do. It does not matter. Where I think they get hung up on is they think the value is going to be less than if they go FH or conventional lending.
Yeah.
And that's a different misconception conversation, because that's not true. You're going to have the same data, the same comps, because each value and each appraisal is going to have a different value opinion. Yeah. Because we're human. It's a human element when you do the adjustments on their appraisal grid on the comps that they use. But what's good about that is conventional and FHA don't let you know up front if the value is not going to be there before you get the appraisal. VA is the only financing that will say, hey, we're not there. I need some more data. And that's called a tidewater. So it does give us one opportunity to get the purchase price. And then if that doesn't happen, we have a reconsideration of value that we can go down the road with and have it reviewed at the VA level and see if we can get there. Yeah. So it does have two other steps to try and get to appraisal value, or purchase price value rather, if you use VA financing.
Well, it's when you couple that, again, that's pretty significant, that appraiser on a VA deal, before they even give you a number, will say, I'm having a hard time coming up with the number, getting to the purchase price, more data. Like you just said, they don't do that on FHA, conventional USDA. That's it. Couple that with what you said earlier about the underwriting process. They're trying to find any and every way to get that approval done, which is why VA loans have a higher approval rate than every other loan. So when you put it all together, the VA, when you have a VA borrower or a VA buyer, that is arguably one of the strongest buyers, because everybody involved is trying to make it happen for that veteran.
Yeah.
From the underwriter, a lot of times underwriters are kind of accused of picking things apart. Are we trying to find a way to get this approved, or are we trying to find a way to deny it? It feels like we're trying to find a way to deny it sometimes on some of these loans. Not on VA. Everybody's pulling in the same direction, trying to get that veteran approved in that home. From the underwriter, from us as lenders, obviously, and originators, to the underwriter, to the appraiser. And that's one of the reasons the VA is, when it's an option, it almost should always be used, in my opinion.
Yeah. And VA has a higher approval rate because they fall onto the residual income calculation of the veteran. So if my ratios are over the limits for conventional or FHA, but they work for VA, it's because of the residual income. So it's something to consider when you're qualifying or not willing to take a VA offer is, well, that loan's better, it's better approved, and it's better on the payment for the customer. By far. It always will be. I shouldn't say always. 99% of the time it's going to be better than an FHA or conventional loan, because you don't have MI and you're going to have a better opportunity for interest rate, because again, the lender's guaranteeing that loan by 25%. So when it comes to VA, I think in this marketplace, I haven't had a lot of pushback. I've had more questions than pushback, which helps, because you have realtors that they may do one or two a year. Yeah. That's a VA. And even though they go through classes and training and all that, they still have very simple questions that they're asking that I think most realtors should know, but we answer those questions for them. So at the end of the day, it will always be a much better loan for them.
Yeah, it's funny. Renee, you met Renee, local realtor here in Van Alstyne. She and I are about to work a deal together, and it's her buyer. She's the buyer rep. Her buyer is a veteran, so we're going to use the VA. And I ran into her Saturday, and she's like, Ryan, I'm getting ready to write this contract, but it's a VA. I haven't done a VA in so long. I'm worried I'm going to miss something or forget something or whatever. And Renee, there's really no difference in a VA deal versus any other deal. About the only thing is we have to do a termite pest inspection.
Yeah.
That's about it that you don't do on a conventional loan, that you don't have to do on a conventional loan. Otherwise, everything's pretty much the same. There's really
It comes in a third-party financing to them. They don't know which box to check or how to fill that out because that's a different line item for them. And for the most part,
you just don't. If you're a realtor, a lot of times you just don't run into them very often, and so you just worry about well, I'm going to miss something. But if you're listening, rest easy. There's really not much to it at all. Nothing's really different. And
just to add to that, the pest inspection does not have to be paid by the seller. The pest inspection, termite inspection can be paid by the buyer.
Yep.
So that was a past experience with VA was, the sellers have to pay for that. They don't have to pay for that anymore.
What does the seller have to pay for, Rich, on if they accept a VA deal?
The seller would only have to pay the non-allowable fees if the loan charges exceeded 1%. Because the veterans are capped by how much they can be charged on the loan. So if those fees exceeded 1%, then those non-allowables that are outside of that now have to be paid by somebody, either the lender or the seller. But in the past, folks were like, oh my God, non-allowables, my seller's going to be out another $1,000 or whatever. I'm not doing that. Because when they do that net sheet, they're figuring that in.
Yeah.
But when you work up the approval and you work up the terms of the financing on that purchase, we know as an originator that we can't go over that. So if you're under that percentage, those non-allowables don't come into play. And
rarely do we go over 1%.
Yeah, or if so, and the seller doesn't want to comply, then as a lender, we will step in and more than likely help out in that situation.
Yeah.
But I haven't ran across that in years.
Yeah. Yep.
All right. So our next topic that we should probably talk about is the refinancing market. That has come back into play here recently. Market rates, there's opportunity for existing homeowners to refinance their home and at least obtain some savings versus waiting to see what the election does. I mean, there's opportunity there. Can you talk a little bit about, what you've seen or maybe some of the advantages that you as a client would want to take advantage of in that situation?
Yeah. I mean, refinancing, it's like it's 1 week, it looks good. And the next week it's like, maybe not as good this week. And it depends on the type of loan that you're in. I think at this very moment, if you bought a home, last year, the year before, say when rates were elevated at their peak, if you did it using FHA or VA, it might make sense to refinance right now. Certainly worth just looking at it. Conventional, it might, but probably more likely FHA, VA. I think what I've seen where the biggest benefit is for where refinancing might make the most sense is cash out. Values have skyrocketed over the last several years. They've leveled off here recently, but they haven't really gone down. So we're still peaked out in value, and debt has also skyrocketed. And so I've had a few different. I mean, there was data this morning that I'm going off memory here, but I want to say 24% of holiday spending last year was put on credit cards, and a large number of that is still owed, still hasn't been paid yet. And they're expecting, the spending is still, we talked about this earlier, the spending is still happening, but it's being put on credit cards. And so there's a lot of people that are in debt and heavy debt in some cases. And if that's you and you have some equity in your house, like when we talk about interest rate, well, why do you want a lower rate? Well, because I get a lower payment. Okay, so you have better cash flow. Well, if we can keep your rate around the same, even I've even seen where it makes sense, even if your mortgage rate goes up, but we're paying off all this high interest credit card debt that you're not getting anywhere on, and it all of a sudden frees up $500,000-$600,000 a month. I mean, you've seen what I've seen, Rich. You've seen cash out refinances, change lives. Like, I don't mean to be dramatic here, but for somebody that where sometimes it frees up $1,000+ a month, that's huge. Who cares what the mortgage rate is at that point? Everybody wants the best rate. I want the best rate. But anyways, my point here is debt consolidation refis with people having to put so much money on credit cards over the last couple of years because everything's so freaking expensive. That's where it's at right now for a lot of people. And that's,
and I think if you're a client out there and you're considering that, I mean, think about the forward thinking of what it looks like after you do that. Your credit score is going to improve. You're going to have more cash flow. But what what I talk to my customers about, what will you do with that money? Yeah. Are you going to save it? Are you going to invest it? Does it go into a college fund? Does it go back into the principal of the mortgage payment to accelerate the term? So who really cares? I'm going to say who cares about what the rate is, but you can effectively lower what you owe by taking that revolving interest that's getting you nowhere and putting it back into a fixed term.
Yep.
So those are the ideas that I present. And, if it still doesn't make sense, it doesn't make sense right now. But for the most part, if you're putting items on the credit card, your credit score is going to be affected. So what you may think you shouldn't do now versus doing it 6 months later, your credit score may go from X to Y, and now you're really not upside down. But the effect of that interest rate is going to be pretty dramatic. So if you're looking at doing something now and you're not really sure because where rates may be right now, it's still be open to the conversation and be open to the consultation of what that would look like on a payment and the ideas that you can do, what you can do with that money if we were to save you, whatever that dollar amount is. Yeah. And if it doesn't make sense, it doesn't make sense. But for the most part, paying 21, 22, 23% on a credit card, and you got $50,000 or $60,000 in debt, I'm not stressing out about the mortgage interest rate.
No.
Because that's not relative right now, because I know if I improve my credit and my cash flow is better and I accelerate the payment during that time and the next time I want to maybe consider a refi, you might be in a better position to do even better next time.
For sure. And then when you look at cash out refinance, to me, it's a math problem when it comes down to it. So what's the cost of this refinance, title fees, all the stuff you pay, right? What are the total costs for that? And how much am I going to save each month? And it's just cost divided by savings. And a lot of these cash out refinances, when we look at them, when they do make sense, that break even point is sometimes 8 months or 18 months or something like that. But I mean, it's quick. You save so much money. So if if the refi is going to cost you $8,000 in fees or, whatever, it wouldn't be that much in most cases, but whatever it is, and you're going to save $500 a month, it's your 8,000 divided by 500, and that's going to give you a number, and that number is months. How many months it would take to recoup that cost? So again, going back to some of the things we talked about at the beginning, those are the things that we will explain to you if this is something you're thinking about, and show you how that works and make that easy to understand, so that I'm never going to talk somebody into a refinance or buying a house. I'm going to help them understand what they need to look at, what they need to maybe compare, and let them make that decision.
Yeah, that break-even point could even be accelerated because you're not going to have a payment due on the mortgage for 30 days. So what I tell my customers is, look, if you've got that payment deferred, it's another $3,000 or $4,000, let's say, in payments, plus the debt load that you were going to pay on your credit cards that month. Put all that back to the principal with the first payment, then your break-even point just got reduced by 3 months or whatever that number is.
Yeah.
So even though you have some cost to incur on the refi, and you're adding that to the new loan amount, you can reduce that principal with what I just suggested.
Yeah.
And still start fresh on a new cash flow for the remainder of the next time you want to refinance the home.
And, 90% of the time, there's no out-of-pocket expense on a refinance. We can roll it into the loan. You're still paying it because it's getting rolled into the loan.
Right.
To be clear, sometimes with FHA, you're bringing, a monthly payment to the table to cover some of that stuff. But you're not doing FHA if we're talking about cash out, to be clear. On a cash out refi, you're almost never bringing any money to the closing table. We can build it all into the loan, structure it, give you that math on break even. And the only thing you may be paid out of pocket maybe is appraisal costs or something like that. Yeah.
Let's see. Let's talk real quick about self-employed. Can we get someone who's self-employed approved for a purchase or a refinance? Are there programs out there for that?
100%. So one of the tricky things with somebody that's self-employed, as you know, Rich, is sometimes we don't show what we really make on our tax returns. And traditionally, that's the only way we can calculate income for somebody self-employed. You don't have a pay stub per se. Sometimes we do, but whatever. We have 1099s or we have tax returns or a combination of. So we look at those tax returns and it shows you only made 30 grand last year when in reality you made 150 or whatever. And we all know why we do that, because we don't want to pay taxes on that 150. So we have expenses, we have whatever. And so traditionally that person has had a hard time getting approved for a mortgage, even though they make plenty of money. They don't really show that they make that money. So the workaround is there's a few different options, but one of the most common, we can look at your bank statements and we can look at the deposits that are made into that bank statement and calculate income that way. I just did this with a client with one of my realtors here recently, where it was that exact scenario, the tax returns. He was it doesn't really matter what he was, but he was a landscape guy. Whether it was mowing yards or bigger landscape projects, and all of those deposits were in his bank statement. And we sent those to one of our lenders that does really good work on these bank statement loans. They gave us what we could use for income. And then we got a letter from his CPA saying that his expenses were 15% or whatever. And ultimately we came up with that number, and all of a sudden he made more than enough to qualify using bank statements instead of tax returns. That's just one way. There's other ways, but that's just one way that somebody that's self-employed that maybe doesn't report, I don't want to say report, doesn't show their income on the tax returns, what they're actually making, where we can make a loan work.
Yeah, another option too is the 1099 option, where if you're a true 1099 person and you're getting issued 1099s, we're going to take that 1099 and we're going to average it by 12 or 24 months, depending on how many years we want to get. And that's it. There's no other, there might be a P&L, but for the most part, the 1099 is going to be your documentation of income as well. Now, each of those programs is going to be dependent on what the down payment is going to be, because one's going to be riskier than the other on what you're giving for income documentation. But for the most part, it's available, and it's a good program.
Yeah, you're not going to get zero down on that,
No.
Yep.
But you're going to get qualified. You're going to have an option for sure.
Yep.
All right, we've got about 10 more minutes. So let's talk about what documents do I need to apply to get a mortgage? I mean, it shouldn't be less than what? Pay stubs, W-2s, bank statements, driver's license.
Yeah, I mean, you just nailed it. If you're not self-employed, it's typically going to be your most recent 2 pay stubs, your most recent 2 bank statements, your most recent 2 W-2s, and a copy of your ID. And that's it to get started. Well, ultimately, sometimes when the underwriter digs in, they have to go question about a deposit, and we have to explain, well, that deposit was somebody owed me that money or whatever, right? There's normally a little bit more after once we get the loan submitted, but to get pre-qualified, that's all we need. If you're self-employed, depends on a couple of things. We might need tax returns or bank statements, things like that.
With our origination system, that is all paperless. So if you're applying, you're going to get a punch list of items that we need uploaded. Once we have that, we're going. We're going to get you pre-qualified, pre-approved, whatever aspect you want us to do within 24 hours. If we've got to extend that out further, we might need a written verification of employment. If you get extra income above your base, commission, overtime, those we have to verify a 2-year history of. So at the end of the day, if you are prepared as a client and a consumer to get pre-qualified, you should have an answer from us within 24 hours. So if you're in the marketplace or getting ready to get in the marketplace, those are the items that we're going to need: pay stubs, W-2s, bank statements, driver's license. If you're fixed income, it's your Social Security income, your retirement benefits. Those items that we would need to show your income are going to be different than pay stubs, but for the most part, when you do apply online, you're going to get that punch list of what items specifically we need to verify.
Yeah.
So it's a very quick process.
Yep. And
which
then,
goes to the next question: how long to get pre-approved for a mortgage? I mean, it's like I said, 24 hours. From a closing aspect, I think you've closed a loan in about 15 days. I just did a VA loan in 12 days that closed last month. When I give a client or a realtor an average of how many days, I go back to, well, if the client's got their stuff together, we're going to get it done in 15 days. If we've got to chase things down or he or she's not sending the right documentation, we're going to push that to maybe 20 days. But for the most part, we're closing on average less than 30 days, if not quicker. Yeah. Because appraisals really aren't holding us back by any means right now.
No, if you do a 30-day contract, which is kind of the typical contract, we'll be ready to go. We'll be waiting for that close date when it's all said and done, as long as the client, doesn't drag too much on getting us stuff when we need it.
And we have lenders that if we need a favor or need an exception or a rush or whatever the case may be, we ask for that to try and accommodate. But, for the most part, our average for quite a while has been about 15 to 20 days.
Yeah.
So if you're out there listening, it's not a 30-day process. So to try and time making sure you're not paying double rent. A lot of people don't think they got to pay the rent and then a mortgage at one time. You're going to have that payment on the mortgage be at least 30 days without anything.
Yeah. I mean, if you close in October, you'll have no payment in November and start the new loan in December. You close this month, skip the next month, start the new loan the month after. Same for a refi.
Yep.
If you're thinking about anything we've said today, maybe has you thinking, maybe I will call them, look at that refi option. Just know you also might get to skip December's mortgage payment, which would be nice for most people.
Yeah. The time right now might be the best time because like you said, you got the holidays coming up. Instead of using credit cards to, do the shopping, you may have an opportunity to kill two birds with one stone, get the house refinanced for better terms and not have a payment for 30 days during the holidays. So there could be an opportunity there for you.
Yeah.
Well, this is good stuff. I'm going to end it here. If anyone needs to get in touch with Ryan, how can they reach out to you to get pre-approved or take a look at a refinance?
My cell is 214-763-6394. Email is rgibson@alliancemtggroup.net. You can also go to Ryan Gibson Mortgages with an S.com.
Awesome. And my name is Richard Sarey. You can get in touch with me at 214-872-2188. If you like our podcast, please subscribe. We've got social media out there too that you can follow us on: Facebook, Instagram, TikTok. We're in all that stuff. So would love to have you join us and follow us for more information. All right, buddy. I appreciate you. We'll talk to you soon.
All right. Thanks, Rich.
All right. If this episode has been beneficial, we'd love to hear from you. Please leave us a review on your favorite podcast platform. Also, for regular updates and tips, make sure to follow our social media channels, which you can find in the show notes. Until our next episode, keep making homeownership dreams come true.